watching Businessworld Live. I'm Danie, Laurel.
And I'm Delos Santos. Here are the biggest stories to kickstart this trading day, Wednesday. As the country's manufacturing output hit a three-year high in February, producer prices rose 4.4% in the same month. The peso strengthened on the prospect of a stronger production economy.
How will the easing to Alert Level 1 boost the country's recovery story? NEDA says the shift to the new normal will generate more than 9 billion pesos in economic activity per week.
But some health experts as well as government officials are raising some concerns, saying the country may not have been prepared for the new normal.
And with the sustained increase in pump prices, the BSP concedes that inflation will likely breach their target in the second quarter. We begin our broadcast with more details on the country's factory output hitting a three-year high in February. And with that increase, the producer price index for manufacturing, which measures wholesale prices, also rose in that same month.
Now, that's on the back of a pickup in production and demand following the further easing of mobility restrictions. The IHS Markit Philippine Manufacturing Purchasing Managers Index, or PMI, jumped to 52.8 last month. That's from 50 in January. Now, this is now the highest PMI reading since December 2018. A reading above 50 indicates improvement in conditions for the manufacturing sector, while below that threshold means the opposite. The higher PMI figure also pushed the peso to a stronger level against the dollar on prospects of a stronger production economy. IHS Markit attributed the better performance to looser restrictions, which resulted in production growing at the quickest pace in more than 3 years. New orders also went up, while exports ended 4 months of contraction. It's date of Alert Level 1 for Metro Manila and 38 other areas across the country.
But some health experts remain divided on whether these areas are prepared to transition to the new normal. Mobile journalist Jacob Lazaro gives us a front seat to that story.
The country has officially entered the new normal. Borders are down, contact tracing forms are out, and businesses and vehicles are back at full capacity. But the Philippine College of Physicians feels we have not prepared enough for it.
We, in the healthcare sector, we are actually bracing ourselves for a possible spike again, after we have gone down on our restrictions.
Dr. Encarnita Limpin worries that the country may see another surge unless safety measures are put into place. 2 years into the pandemic, Limpin says it is clear that many establishments, workplaces, and public vehicles have still not put in proper ventilation. Limpin fears that the public transport will go back, overcrowding.
Kung kulong na kulog doon sa loob ng sasakyan, lalo na yung mga buses, then definitely, if there is one there that is positive for COVID-19, that can already be a source of spread.
The League of Provinces of the Philippines is also worried, especially with vaccination rates still low in the countryside. But Dr. Conky Quizon of the National Immunization Technical Advisory Group is more confident that we have hit the endemic stage, where life is somewhat normalized already. But Quizon said the responsibility of keeping safe has now been passed on to the ordinary Filipino. And that means minimum health protocols like masking and social distancing.
Kahit sabihin ng gobyerno na pwede na, ang ganito, ang ganon, nasa sa atin kung paano natin talaga aalagaan ang sarili natin, okay?
Mobile journalist Jacob Lazaro, we are One News.
Meanwhile, NEDA is optimistic on the benefits Alert Level 1 will bring, saying it can generate economic activity worth around 9.4 billion pesos per week. Socio-Economic Planning Secretary Carl Henry Chua says the lowest alert level will also benefit over 60% of the economy and some 20 million workers. Chua adds that there will be 170,000 less unemployed Filipinos by the second quarter under Alert Level 1. Economists are also welcoming the further reopening of the economy, but one of them warns recovery will not be instant. Professor Emmanuel Leco tells One News' The Chiefs that will not take place overnight, and some sectors, including transportation, will still undergo a transition period. Leco notes that it will also take some time for consumer confidence to pick up despite the lower alert level status.
While we welcome this development, I think we have to disabuse our minds in saying that once we open, now we have 100%, the economy will be on the road to recovery. It will be eventually, but not tomorrow, not next week. It will take some time.
Recovery may not be achieved instantly, but as early as now, the restaurant industry is already reaping the benefits of the eased restrictions. Also on the Chiefs, Resto PH President Eric Teng said their group is now seeing a spike in bookings for the upcoming weekend, which is the first under Alert Level 1.
And requirements by ITF, we have our in-house safety officers. But the difference now post Alert Level 1, of course, we can now dine face-to-face.
It's not only restaurants, supermarkets, most of which have remained open even during the course of the pandemic, are gearing up for a boost in foot traffic under Alert Level 1. To find out their expectations, we have Stephen Kua, President of the Philippine Amalgamated Supermarkets Association. Good morning, Sir Stephen. Thank you for joining us today.
Good morning, Jester. Danie, morning.
All right, sir, how much of a lift are you expecting here, NCR and 38 other areas de-escalating to Alert Level 1? Is the sector well on its way to recovering from the downturn caused by the pandemic?
We have to be cautious now that we are in a transition stage, okay? The fact that we're in Alert Level 1, that's good news, no? The very proof is I'm here right now in Tagaytay on a face-to-face, in a face-to-face seminar, no? Workshop. But, you know, we have to be cautious. Now, I have alerted all our members to still be cautious. Have our employees wear masks if possible, wear shields, no? And still do tracing. Even though ITF may say there is no need for it, now we still do it, no? Kasi it's transition stage pa tayo, eh.
Sir, it's already day 2 today. How was day 1? How was the foot traffic? Is there a marked improvement within day to day from Alert Level 2 to Alert Level 1?
As mentioned by Mr. Leco, this is not magic. This is not instant, no? I mean, you know, it's a slow transition, no? Some people are still afraid to go out. A lot of people are still hesitant to attend church, even although it's Ash Wednesday today. They're still hesitant to go have their ashes on their forehead or on their heads. So, 2 years tayong nakakulong. It'll take a little bit of time to build consumer confidence, no? Business confidence is up because it's Alert Level 1, but consumer confidence, we still have to build on that.
Sir, in terms of timing, what do you then expect? You did mention it might take some time. Of course, our gauge here is pre-pandemic level type of consumer spending. Is there a new update on that given that we are now at Alert Level 1?
Our good NEDA head mentioned it'll probably take 10 years for it to really go, you know, normalize really. But maybe 1 year, you know, we're a bit back on track. Hopefully by Christmas time, no? So everybody, it's transition stage. All businesses have to prepare accordingly.
All right, Sir Stephen, even under Alert Level 2, it's very noticeable that mobility has increased even the past few weeks here. But is the level of activity the same for standalone supermarkets and those that are inside malls?
Those inside malls are having it better than those which are standalone, no? People would go to malls to finish 3-4 things, multitask, get things done, no? And not just shop for supermarket items, no? Those who are standalone, you can only go and shop for your supermarket items. So medyo mas slow ang pickup versus those inside malls.
Sir, you already mentioned that there is a challenge when you are enforcing health protocols. Here, are there new measures that we need to put in place, or are we, living with the pandemic or endemic and actually reducing the protocols and safety protocols because, of course, we want more people to be entering with less restrictions?
We have advised members of our association not to, slow down on protocols. No, however, feedback is that some customers, would not want to sign in their the tracing forms, no, and There is no more taking of temperature. So at least we're slowly trying to show them that there's confidence now that it's endemic and not pandemic. But masks are still on. We encourage them to wear masks and shields, no, but we don't require them. It's not mandatory anymore.
Sir, I just want to ask on a very pressing current event issue, of course, the war in Ukraine and Russia. And of course, it's well known that they supply agricultural products. The prices of commodities have skyrocketed. How are you coping with that? And are the supermarket, players actually preparing for the eventuality that there might be supply chain issues here?
Well, fresh produce ang tatamaan yan, no? Those who transport to the wet markets, no, every day or every other day, no. Kasi gasoline is really big part of their expense, no, in transporting these goods, no. I asked as of last week before I came up here to Tagaytay, I asked, and vegetable prices were pretty stable. That's what they said. Mura, okay, walang problema, no. But in the next few days, we don't know. Just as COVID air is about to clear, hopefully it continuously clears, no. The uncertainty of that conflict between Russia and Ukraine is, bringing about some fear, no, sa customers as to availability of stocks and possible increase in prices. By the way, DTI is holding the National Price Coordinating Council meeting next Tuesday, no, which our association Pagasa is a part of, no. So I guess DTI will be telling us what their advice is or guidelines are for manufacturers now in terms of price increases.
All right, definitely that's something we are going to keep tabs on. Hopefully we get updates from you, Sir Stephen, regarding that. But circling back to the pandemic here, what for you should be part of the country's pandemic exit strategy here? Are you also supporting calls to do away altogether with the alert level system?
I would suggest cautious transition, no. Tayo mga Pinoy, mahilig tayong to jump the gun, eh. Mahilig tayong count the chicks before they're hatched, di ba? So, as mentioned, this is not instant. Other countries are still on a surge, no? Our neighboring countries, no? So, though we say that it's endemic, but, who wants to get sick, right? Inside a bus, inside a conference center, daming tao, di ba? A few guys go in who are infected and it infects everybody. I mean, that's going to cost the economy a number of man days, lalo na if they're executives, so it's going to cost the economy a lot again. No? So, slow but sure. Let's not be in a hurry.
All right, slowly but surely that encapsulates everything, at least from your point of view. Thank you very much for your time this morning. Stephen Kua, President of the Philippine Amalgamated Supermarkets Association. Thank you, sir, and stay safe.
Thank you for having me, Chester, Dan.
The Bangko Sentral says the sustained increase in oil prices will likely drive inflation beyond their target for the second quarter. BSP Governor Ben Jokno explained that with current prices fairly stable, he expects inflation to be within their target range in the first quarter. While Jokno admitted that inflation may rise in the second quarter, he believes this will go down again by the second half of the year. The BSP said February inflation likely settled at 2.8% to 3.6%. If realized inflation could be faster than 3% in January, but still within the 2 to 4% target of the BSP. Now, aside from fuel pump price hikes, LPG prices have also started to increase. The cost of LPG per kilogram is now at 7 pesos 14 centavos to 7 pesos and 95 centavos, while an 11 kilogram cylinder now costs 87 pesos and 45 centavos. Auto LPG prices have likewise increased by 4 pesos and 44 centavos per liter. Data from the Energy Department also shows that household LPG prices in Metro Manila now range from 794 to 1,054 pesos per 11 kilogram cylinder as of February. Suppliers explain that the LPG hike is still caused by the ongoing Russia-Ukraine war.
The natural gas. So the tendency is they have to go to Middle East to buy for their needs for fuel. Yung natural gas kasi is the main source of heating ng EU.
We'll have more stories when Business World Live returns. Stay with us.
One, two, three. Mic test. 1, 2, 3, 4, 5.
You're still watching Business World Live here on One News. I'm Jess Delos Santos.
Danie, Laurel.
Okay, Dan, that PMI reading is what pushed stocks to extend gains yesterday, and the peso has benefited as well. But today is a different story. Give us a health check on our local unit.
Exactly what you said, Jess. So much optimism yesterday. The question was, can we sustain this? Unfortunately, it doesn't seem to be the case. The peso weakening a touch, trading at 51.366 to the greenback. You can see that on my Bloomberg terminal here. This after it had advanced, or as you mentioned, strengthened after the PMI improved in February. And that actually led Yang Si Tan, he's an FX strategist at Malayan Banking Berhad in Singapore, to hint that this move actually this move of the peso hints at cautious optimism in the markets. There was also news yesterday of the U.S. and the allies potentially releasing reserves of oil, which could, of course, benefit the peso, given that we are a net energy importer. And indeed, another one that is sliding this morning is our local index. We're down by 0.6% after having been up again yesterday on the back of strong economic releases, at least domestically. Of course, there's still the Russian invasion on Ukraine. That continues to escalate. That cannot be discounted. Analysts have said that yesterday, the markets moved positively on the back of the possibility of talks between them. But then these high-level talks between Kiev and Moscow on Monday ended with no agreement, except, of course, to talk some more. Asian markets, however, did seem to be stabilizing yesterday. Let's take a look at the banks. This is also pulling back this morning by 0.7% after it had rallied yesterday on a reports that the loan growth was quickening finally in January. And this as the RCBC treasurer said that their bad loans may have already peaked, and that, of course, as they had released their income of 2021 up to record highs, up by 41%. Jess, so again, the banking sector still in focus here with only Union Bank in the green.
Okay, Dan, another one that is optimistic is Ayala Land, but retail and hotels still trailing. Tell us more.
Okay, Ayala Land optimistic yesterday, but take a look at the stock trading down by 2.3%, trailing as the local bourse as well, even as they revealed yesterday that their net income rose by 40% to 12.2 billion pesos in the year 2021. They also mentioned they expect the profit to return to pre-pandemic levels within 2 to 3 years, and they are planning to start 100 billion pesos worth of projects. That is more than a third higher of what they did last year. Now, when they look at the different sectors of Ayala Land, property development, that was very good. That was up by 14%. To 75.9 billion pesos, but they did mention that most of the revenue buildup was only in the fourth quarter. Commercial leasing, actually full year, that fell 5% in 2021. You also have shopping center revenues down 13% to 7.9 billion pesos, and hotel and resorts earnings down 12% to 2.8 billion pesos. However, what is very interesting is that you can see the market effect of the fourth quarter reopening. Just imagine, Jess, in the fourth quarter, shopping center revenues jumped 106% to 3 billion pesos. So lumabas ka ba, nag-shop ka ba? Because you will be one of the 106% jump there. And another one, revenge travel and leisure, hotels and resorts revenues in the fourth quarter jumped 62% to 981 million pesos. They have also mentioned that they will be boosting their capex by 40% to the tune of 90 billion pesos.
Here are the other headlines we're keeping our eyes on. The government fell short of its budget deficit ceiling in 2021 as it generated better than expected revenues but missed its spending target. Full-year deficit stands at 1.7 trillion pesos, up by 21.8% year-on-year, but missing the 1.9 trillion ceiling. Revenues in December reached 231 billion pesos, while total spending is at 4.6 trillion pesos. The Treasury says spending grew due to infrastructure and other capital expenditures, continued spending for various pandemic recovery measures, and higher internal revenue allotment for LGUs. The government runs on a budget deficit when it spends more than it makes to fund programs that support economic growth. It borrows from foreign and local sources to plug the gap.
Now, the government raised almost 458 billion pesos. That's via its 5-year retail treasury bonds offering, which ended on Monday. This was the Treasury's 27th issuance of RTBs and the first of this year. The bond offer was launched on February 15th, with the Bureau raising over 120 billion pesos just from the rate-setting auction. The bonds fetched a coupon rate of 4.87% with settlement on Friday and maturing on March 4th, 2027. The Treasury said proceeds from this issuance would be used to fund the country's COVID recovery plans.
The The government continues to ramp up its efforts to repatriate Filipinos from Ukraine. Marian Enriquez with a story.
So this is our situation. We're inside the car with my 2 children and we're waiting for the ferry to open.
35-year-old Filipino Jeremil, his Ukrainian wife, and their 2 children traveled for 18 hours to leave Odessa, Ukraine, as war with Russia continues. After not being allowed to enter Moldova, they went to the Suceava border in Romania.
So along the way, talagang maririnig mo yung mga pagbagsak ng bomba, paglipad ng rocket. yung mga bata parang hindi sila mapakali. Iyak na iyak sa loob ng sasakyan.
Even though it was painful for them to leave behind their home, they had no choice. What's important for Jeremil's family now is that they were able to flee to Romania, all thanks to Filipinos living in the area. Among those who helped Jeremil and his family were Josephine and Albeth from the Filipino Free Movement in Romania. They offered their home to serve as temporary shelter for Jeremil's family in Bucharest.
So lahat po yan, galing po yan sa komunidad ng mga Pilipino dito. Daming damit, foods, chocolates, mga toothbrush, toothpaste, shampoo, delata, mga water, mga coats, sapatos.
Food, clothes, and toiletries were also sent for refugees along the Romanian border. Despite being in another country, Albert and Josephine admit fear is still present.
So dahil ito yung pinakamalapit na parang neighbor ng Ukraine, so ang gagamitin lang parang military bases is yung Poland at saka yung Romania. So talagang nakaka-bother siya.
The Philippine government is now doubling its efforts to bring home Filipinos from Ukraine. Even though Philippines is open to Ukrainian spouses of Filipinos, Ukraine is not allowing men aged 18 to 60 years old to leave the country due to martial law. For News 5, Marian Enriquez, we are One News.
And that's a first look into the business day this Wednesday, March 2, 2022. I'm Delos Santos.
And I'm Danie, Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.